Hooty-hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. It's Wednesday, September 15th. What do we have going on in the markets? Well, markets are struggling. They've been coming down. They're up. Dow's up about 100 points today. We'll see how it closes out. But the markets have been coming in. Actually, we're touching, the 50-day moving average on the S&P for about the 8th time this year. Now, every time we hit the 50-day moving average, we bounce higher. It's called buy the dip. Now we're almost touching that 50-day moving average again. Will we bounce off of it for the 9th time? I'm questioning it. I don't think so. I still think we're down about 3% right now, 2-3%. I think this is going to come in maybe about to the 10% range. Now, I'm not saying we're going to crash here. No, I'm saying we're going to come in, and that's the buying opportunity. But the buying opportunity is not this little 3% dip this time. I think it's going to be closer to a 10% pullback, and then we get that buying opportunity where the markets will go higher because they're going to print the money. They're going to flood the market. The money has to go somewhere, so it goes into the stock market. Pushes the stock market higher. Congress, they want that $3.5 trillion infrastructure on top of a $1.5 trillion spending bill. Look, the markets will go higher when this happens. It just is how it's going to work. But I do expect that pullback right now. So we're going to get some volatility going into the end of the week here. We got options expiring on Friday, and that's going to give us a lot of volatility. I'm not sure the 50-day moving average is going to hold this time. Use caution here. That's what I'm saying to do. Okay, let's get on to what I want to talk today about. I want to talk about the housing market. Now, in my opinion, the housing market right now is in big trouble. Big trouble. Now, the housing market's been strong, gone up about 20% year over year. House prices are up 20%, right? Well, we peaked out. We're starting to come back down. Rent prices up 18% year over year. Okay, but nobody's paying the rent. There's going to be 7 million evictions. Now, when those evictions happen, there's going to be more inventory on the market. Now, the landlords think they can raise the prices when they get these deadbeat tenants out. Maybe they can. I don't think they can, though, because they got 7 million people going away. Who are they going to rent it to? They got to bring 7 million people to fill those vacancies. I actually think rents are going to come down. Now, I could be completely wrong. A lot of people say inflation's going to push rents higher. I don't see it that way. And I don't see prices of homes going up from here. I think we peaked out. We peaked out in July. July we hit the peak. Okay. Now inventory hit a low back in April of this year, but inventory's been coming up. Okay, we've been coming up. And what's that doing is putting pressure on prices. Prices are at record highs. I mean, $380,000 for the average home in the United States right now, but I think it's changing. Okay, we got the fiscal cliffs I talk about. Okay, the eviction moratoriums come to an end. But the forbearance, the mortgages, banks can now foreclose again. For a while, they couldn't foreclose on you. So you could sit there in your house and not pay rent. Now, they would tack that onto your mortgage as another mortgage. At the end of your mortgage, you'd have to pay that second mortgage off. That's what forbearance is. It's not money that goes away. It's just a bigger loan on your house. And, the banks, that's what they were doing. They're in forbearance. But now they can actually foreclose again. And now these big banks, that's what they're doing. They're starting to send me letters. I'm a broker. No, full disclosure, I'm a real estate broker. So the big banks have been contacting me. Okay, what have they been contacting me about? Well, they want me to get onboarded with their company, like Chase, like Wells Fargo. These big banks know that they have a slew of foreclosures coming. They want real estate brokers to go out and sell these foreclosures because they don't want to own the property. That's not their game. That's not what they want. They want to get rid of these. They want to get money coming back in. Okay, so they're going to take back the houses and then they have to sell them. Well, who sells them? Well, the real estate broker. So they're sending me letters, sending me emails saying, hey, come on board with us. We're going to have a lot of properties to sell and we want you to help us. Okay, that's neither here or there. But here's an interesting thing. Okay, so as a real estate broker, I help clients. Now, one of the clients I'm helping, we went and looked at a property. Now, this property was a house. It's in San Jose, California. And anyways, in 2018, the people bought it. They bought the house for $1.5 million. Okay, $1,550,000. Okay, so $1,550,000 is what they bought the property for in 2018. Now, the properties have gone up, right? So they thought they could sell their property and get out for $1,750,000. Okay, $1,750,000. So they paid $1,550,000, and they're trying to get out at $1,750,000. Okay, and make $200,000 and walk away with profit. Well, the problem is the house has been sitting there now for over 60 days. Over 60 days, they've been lowering the price. They start at $1,750,000, okay, and now it comes down to $1,650,000, $1,600,000, $1,550,000. They're down to $1,500,000, which is $50,000 below the price that they bought the house at 3 years ago. $50,000 less. But think about it. The closing cost when you sell a house is about 6%. So 6%, let's call it 90,000. Let's just call it roughly 100,000. Losing $100,000 in commissions and closing fees plus 50,000. They're out $150,000 already, and that's if they can get to $1,500,000. They don't have any offers. Now my client is considering putting in an offer on the property at $1,400,000. $1,400,000. Okay, well they would lose $250,000 if they accept my client's offer. Now $1,400,000, maybe they accept the offer. Maybe they say, no, we can't lose that much money. We got to get $1,500,000. So they wait longer. Now it's already been on for 60 days. Maybe it goes out to 90 days, 120 days. And maybe my client goes and finds another property and they're no longer a buyer. So they come down and reduce theirs to $1,400,000, but there's still no buyers. Do you see how this downward death spiral? Housing's in trouble right now. It's already starting. I mean, I'm surprised that houses that were bought in 2018 in San Jose, California are already under the price they paid. Isn't that interesting? Okay, so people are getting nervous. They're getting nervous. They go, oh my goodness, we got to get out of this. We got to start selling the prices. Prices are coming down now. What's interesting, the list prices of prices that people list their houses at, they have the starting price, right? The $1,700,000 that they were starting at, and they're down to $1,500,000. This is called the price reduction. Now, as realtors, we don't say price reduction. We say price improvement. So there's a lot of price improvements going on. Actually, about 1 in 3 properties right now has been reduced or their price has been improved. Okay, so someone's going to come in and they're going to buy these up, right? Well, maybe not. Maybe the buyers go away. Maybe they take a break. Look, the housing market is changing right now. It's changing. It just is, okay? You got 7 million people being evicted. You have another 2, 3, 4 million. I'm not even sure how many there are in mortgage forbearance, how many of those will keep their property. Once they start seeing the property going down, and once they start seeing they get underwater, they're going to start losing their houses. Okay, now I'm an old guy, right? I've been in real estate for, I hate to tell you, about 40 years. But okay, back in like the 2008 range, we used to do these things called a short sale. A short sale would be, we'd sell the properties before they went into foreclosures to the bank. And we just send the bank a letter saying, well, there's not enough equity in the property to pay off your loan. So would you take like 60% value on your loan? These were called short sales, and short sales are going to come back again. People don't believe me. They say, Mike, houses aren't going to drop that much. Look, when things start to go, they can go really fast. I'm telling you, it's like stairs up, elevator down. Houses are in trouble. I mean, we could lose 20, 30, 40% of the equity. That's a lot of people do have that much equity, but it could be wiped out like that. And all of a sudden they're underwater and we're back back to doing short sales again. Now, I don't like doing short sales because it's a headache. It's more work for me. I have to contact the banks and negotiate with the bank to take a lower amount of money than they're owed on the property. Now, why would a bank take a less amount than they're owed on the property? Because they don't want to take it into foreclosure, bring it back to them, and then give it to me to sell. When I say me, the real estate brokers, I've sold some bank-owned properties in my day, but that's not a fun game. I mean, you can make money doing it, but anyways, there's housing market is just, it's changing, and it's changing to the point where, well, it's getting scary. Okay, now they want to prop this up, right? Okay, now the Federal Reserve, they buy $40 billion a month of mortgages every month just to keep the housing market propped up. Now, maybe they're going to even go with lowering the interest rate. Maybe they're going to pay you to buy houses. They're running out of ways to keep the housing market propped up. But they have to try. They have to try because, once the housing market comes down, once the housing market crashes, well, everything crashes. Stock market crashes. Bond market crashes. All the bubbles pop. Now, is the housing market going to be the first bubble to pop? I think it looks like it is. We'll see what happens. We'll see. But I'm telling you, it's getting interesting. The housing market is in trouble. Be careful out there. If you don't have to buy right now, my recommendation's to hold off. Right now, think about it. They bought that house 3 years ago that I'm just talked about, right? They paid $1,550,000, right? Okay, now what if they had just rented a house for those 3 years? Well, I think they'd be far ahead of their game. They're looking at losing $250,000 on the property that they bought just 3 years ago. Look, if you're not planning on buying and staying in the property for at least 10 or 20 years, don't do it. Don't do it. You can lose money in real estate. People think you can't lose money in real estate, but that's just not true. Houses do go down. They go up. They go down. Look, you can lose money. Be careful out there if you're buying right. I'm not saying go out there and sell your principal residence. You need to live somewhere, but I am saying that it is possible. It is possible that houses come down 30, 40, 50%. And I think I'm being conservative with those numbers. Now, a lot of people don't agree with me. They go, no, Mike, it's going to keep going up. We'll see. We'll see who's right. But it's an exciting week. We got options expiring on Friday. Look for the volatility in the market. There may be some buying opportunities. Opportunities are everywhere. I hope you like this stuff. If you did, give me the thumbs up. If you really like it, punch that subscribe button. We can talk more. I hope to talk to you later in the week. I love this stuff. I hope you guys love listening to it. I'm Tall Mike. Get out there. Have a great Wednesday, and we'll talk again real soon. Bye-bye now.